Hello and welcome back to yet another exciting week on the stock market. In this episode, I will walk you through the news, what has happened within my portfolio, and finally answer some questions from the audience. If you're sitting and wondering about the title for this week's episode, always wrong but sometimes useful, rest assured that you will receive an answer to that question within this episode. So let's start by taking a look at the news. I know this is sad reading, but I really think that it is important to go through. So US no longer expects to open or even partially open up the country before Easter. In fact, the president has turned around quite dramatically and says that the next 3 weeks are going to be like something that they have never experienced before. Their current estimates are that they will lose more than 2,200 people a day when this disease is at its peak, and that their expected total losses before they are done is around 100,000 to 230,000 people. Just to put these numbers into perspective, during the First World War, US lost 116,000 people, so they will most likely lose more than that. But hopefully they will manage to stay significantly below the losses which they had during the Second World War, which was 405,000 people. And as I mentioned previously, this is putting a lot of pressure on the economy when you are forced to shut down the country. Last week alone, more than 6 million people registered as unemployed, and the week before that, the numbers was above 3 million. So within the last 2 weeks, more than 10 million have registered as unemployed in the States. Never in the history of the country have you seen such a dramatic increase. But despite the fact of this drastic increase in the unemployment rate, it will most likely become significantly worse. According to Fed President Loretta Mester, the Fed expects between 10 and 30% of the workforce to be unemployed. As of February 2020, the workforce was a little below 165 million people. That means in round numbers that between 16 and 49 million people will lose their job, depending on how this evolves. If we zoom in and go a little away from the macro perspective, Donald Trump had a rather harsh tweet regarding 3M, saying that they are not fulfilling their part of the Defense Production Act and that will have severe economic implications for them, because they are still delivering masks to Mexico and other Latin American countries. Of course, the CEO of 3M really disagree with this from Trump. I will leave a link in the description to the full interview from CNBC with the CEO of 3M, since they have ramped up their production even before the Defense Production Act was put into place. So they are doing everything they can to ramp up the production of protection gear. Next, let's take a look at how this situation is evolving. This is my video from last week. So last week, 32,000 people were dead, 680,000 people were confirmed infected. We saw that Italy and the United States have surpassed China with most confirmed cases, and that Italy and Spain were way above China when it came to number of dead people. Luckily, we saw that a lot of people has also recovered. But how does the numbers look this week? So the numbers are actually evolving as we would have expected. So we have almost doubled the amount of confirmed cases. We have little more than doubled the total amount of dead people, we have almost doubled the amount of recovered people. If we then take a little closer look just to the top 5 here, all of them have surpassed China now. Italy, it's almost 5 times as much as in China. And I mean, before we hit Easter, New York will have surpassed China as well. If we look over here to the confirmed cases, I mean, look at the numbers in the States. They are almost triple as what they were last week. So the numbers are really speaking for themselves here. It is with a good reason, I think, that I'm worried about the United States, because we know for the next at least 14 days this will only go up, and most likely for the next 3 weeks actually. And while we are on the topic of extraordinary news, it's less than 14 days ago when the Queen of Denmark had the speech to the nation about how we should do this social distancing and trying to follow the new rules from the government, which is really rare that you see someone from the royal family having a speech to the nation. We haven't seen that in Denmark since her father did that after the Second World War. And now I can understand that Queen Elizabeth, the Queen of the United Kingdom, will have a similar speech to her nation this evening. So this is very close to being war times. If we should then try and focus on some positive news, I made this spreadsheet a couple of weeks ago about people in Denmark who need intensive care. And as you can see from the actual growth rate, that number has actually not been increasing as rapidly as one could have feared. So as of now, it seems like we are in the clear of not reaching our boundaries of around 900 people needing intensive care. I have put this line just to say that everything below is an estimation, and here you can see the different scenarios with different growth rates. So if we keep around 1 or 2%, way below the 10, we are very much in the clear. So hopefully we will be able to help out other countries who will be in much bigger need than us. Now let's take a closer look at the news which is related to the title of this episode. Always wrong, but sometimes useful. That's simply just me rephrasing George Box, a famous statistician who is known for saying all models are wrong, but some are useful. And that is not only applicable for statistic models, it also very much is applicable for economic models. So why my sudden interest in economic models? I mean, you're just investing in stocks, right? Well, if we take a closer look at the Danish central bank, 2 times a year they provide a report with the outlook for the Danish economy. And if we take a closer look at the report, which was published this week, 3rd of April, it's a 7-page document, but if we just take a closer look here on the first page, we see that they have to postpone the publication due to the outbreak. And if we read this phrase here, it is not possible at this stage to estimate precisely what the impact of the pandemic on the economy will be using traditional macroeconomic models, among other things, because these models are based on normal historical economic mechanisms. Instead, at the moment, economic developments are being driven by the outbreak of the virus, the containment measures, and the resulting reactions of households and businesses. So what this actually means is the top economists in the country cannot use the models which they usually do when they try and predict how the economy will behave, simply because the assumptions which they rely on in order to use these models are no longer valid due to this situation. I have never seen something like this before. This is really extraordinary. I mean, one thing is that they postpone it, another thing is to simply straight up tell you they cannot use the tools which they usually do. So without going into the full detail of this article, but just put it in highlights. There's a good scenario where we will only have a decline of GDP of 3%, there's a middle scenario with a decline of 5%, and then there's a hard scenario where we have a decline of GDP by 10%. And keep in mind, this is in a country where we are doing fairly good with the virus, at least as of now, with the numbers that I just showed you previously. So if anyone had a doubt on whether or not we will enter a recession, here you have it from the Danish central bank. Denmark will go into a recession, because a recession is 2 consecutive quarters with negative GDP. And I mean, keep in mind, this is in a country where we are dealing fairly well with the virus as of now. We are well within our limits of our hospital system. What will happen in the countries where it's much, much tougher and where the economy perhaps we're already struggling a bit? That is really worrying. Of course, I'm very well aware that there's big national differences for how severe you will be hit and how it will affect your economy. But no matter where you have invested, you need to focus on this, because every single country will have to deal with this one way or another, and that can have very, very big implications on your investments. For instance, in Denmark, we are trying to put in a relief package for a lot of companies, and now there are some talks about saying, if you receive this relief package as a company, you will not be allowed to pay out dividends. I know it's perhaps a bit a theoretical discussion, because if you need help from the government to bail you out, then you are probably not profitable this year. But nonetheless, as a dividend growth investor, the political implications which are currently put into place, at least in my country, that will severely affect your investment if you are not aware of it. So yet again, that was a lot of news. It truly is extraordinary times that we are living in these days. So now let's take a closer look at my portfolio and what has happened within the week. First of all, my portfolio chart is back. Finally, Google managed to fix the bug they had. So that was at least one good news for my portfolio, or at least for my viewers, that you can see the portfolio chart. If we then turn to a second good news and go to the dividends tab, I was actually paid out a dividend 30th of March from Bank of America, little more than $22. So my total dividend for March ends up at $298. And already in April I have been paid out 2 dividends, one from LTC Properties, which pays monthly, a little more than $6, and then I was paid an enormous dividend from Macy's, a little more than $180. Unfortunately, that will be the last dividend that I receive from Macy's until this situation is under control. I will of course include a link in the description below from the Wall Street Journal article, where you can see that Macy's has suspended their dividend. They will stop repurchasing shares, and they will start to follow some of their employees just to try and keep as much cash in the company as possible. This is a severe situation they are in, and I mean, the stock price is really reflecting that, because their earnings will go to zero, or very close to it at least. So while we are on the subject of businesses which are really struggling, my cruise line ship, Carnival Corporation, you are down more than 80%, and of course I have received a question regarding this, which I will be happy to address once we get to questions from the audience. But before we go there, Delta Airlines, the only airline company in my portfolio, I bought it end of January, and I was happy when I saw that Warren Buffett went out and bought 1 million shares more in this in mid-February. and especially when he announced in the beginning of March saying, "I'm not going to sell any airline stocks." Fast forward to Friday this week after the market closed. In the after hours, he went out and sold 12 million stocks in Delta Airlines. Why did he do that? What have he seen that make him sell with such a huge loss less than a month after he had bought it? If you look into the numbers, then I'm afraid that I would have to do the same. Those numbers are not good. Delta Airlines have little less than 9 billion in cash, and there's already reserved tickets for more than that amount, and as you know, they are not flying anywhere these days, so most of those passengers would like to get a refund. That means that's zero cash. On top of that, since all the planes are grounded, they are spending around $60 million a day. So they really need a big relief package from the States simply just to survive. So definitely not the best outlook for Delta Airlines. And as you can see, most of the companies that I have are really struggling. I mean, everything is down. That's just how it is. So what did I actually buy this week? Well, as last week, that's still a really easy question to answer. Absolutely nothing. I'm still waiting to redeploy my dividends because I think the outlook is still way too negative. I think that I will be able to get better deals than what is out there currently. Now, let's turn to the questions from the audience. So after last week's episode, I received some comments, and this one, for instance. Any thoughts on the financial health on the cruise lines given that they aren't covered by the stimuli packages? So let me try and answer that question by only focusing on the cruise line that I currently have in my portfolio. So if we go to Yahoo Finance, look at Carnival Corporation, go to the balance sheet, we see that they have $518 million on the balance sheet. That seems like a good number. I mean, that's a lot of cash to have around under normal circumstances. If we then go to the income statement and look at the total revenue that they have in 2019, I mean, almost 21 billion. Well, that number, how much will that be this year? Pretty close to zero, I should say. So how much is 580 million going to cover? How long will this company be able to survive for? Well, operating expenses, they are not going anywhere. And that's 4.6 billion. So they have cash around for less than a month. So they're not covered by the rescue package, and they simply do not have enough cash. What should they do? Most definitely, they should slash the dividend, and then they should start raising capital as quickly as they possibly can. And that is exactly what they are doing. They are issuing corporate bonds for around 4 billion with an interest rate of 11.5%. So I think it's fair to say it will take some time before we see any money here. And on top of that, they have also issued new stocks, 500 millions, and the stock price is around 8 for those. So your stocks will also be diluted. So in total, it's not a great outlook. But will they survive? That of course still depends on how long this situation will go on, because until those ships are sailing with passengers, they're not going to make any money. So you really need to revise your outlook for this company, because I will say for the foreseeable future, we are not going to make any money here. So whether or not you're satisfied with that, yeah, that's up to you. So that of course leaves you with the obvious question: should you sell and in my case with a loss of more than 80%? Or should you accept the fact that for the next at least 3 years, I would guess, I won't see any money from this? That is up to you to decide. So hopefully this answered your question. Otherwise, feel free to comment on the video. And as always, remember to like, comment and subscribe. That was it for yet another exciting week in the stock market. See you next week. Bye.